Good morning. Well, the Aussie share market is bracing for a heavy round of profit-taking following the sharp losses on Wall Street, with the S&P 500 down 1.8% on fears the coronavirus could dent economic growth. Most asset classes are lower. Bond yields are lower too, as more money has flowed into treasuries, while gold has pushed ahead. At 8:30, the Aussie futures were suggesting a 1.7% drop, or a fall of 120 points at the open, which could mean we fall below the 7,000 point milestone. On Friday, we saw the ASX 200 add just 9 points, ending at 7,017 points. At the weekend, investment bank Goldman Sachs came out as saying the coronavirus outbreak is likely to hit Chinese economic growth by 0.4% in 2020, and it will potentially drag the US economy lower as well. In particular, some analysts are saying the virus outbreak could cut China's oil demand by more than 250,000 barrels per day in the first quarter of this year. However, what we do know is after such virus outbreaks are contained, such as SARS, we do tend to see a strong bounce up in economic activity. In terms of local economic news, this morning we saw a local pulse check come out in way of Australia's manufacturing activity, and it wasn't so good. Australia's manufacturing fell for the third straight month, marking the lowest monthly result since 2015. We saw AI Group PMI, the index, falling by 2.9 points to a reading of 45.4 in January. And of course, let's bear in mind, readings below 50 indicate contraction, above 50 indicates expansion. Bearing in mind, although it was a weak result, January is traditionally a slow month for manufacturing, but this start to 2020 has been slower than usual, with food and beverage the only sector reporting gains. What else to watch today? Well, building permits are also out for December, and that's ahead of tomorrow's key RBA meeting, with rates expected to remain on hold tomorrow. Also keep an eye out for Link, which holds their AGM. But for now, let's quickly bring you up to speed with markets from around the globe. Well, on Friday, we saw the S&P 500 down 1.8, the blue chip index, the Dow, down 2.1 or 603 points. That was its worst loss since August, while the Nasdaq lost 1.6%. Across the Atlantic, European stocks also lower. The Stoxx 600 down 1%, UK's FTSE down 1.3%. On their final day of being a part of the EU, the French CAC down over 1% as well. The German DAX also down 1.3%. Gold, meantime, is higher. It's now at 1,586 an ounce after gaining 4% in January, its best gain since August. Oil, meantime, lower, as we mentioned. It's 1.1% lower at $51.56 US a barrel, and that was its worst month since May. Meantime, the iron ore price last traded 0.5% lower to $92.90, and the Australian dollar is buying 66.89 US cents. Have a great day. Happy trading.